being patriotic is a great thing. Loving your country is a great thing. I'm born and raised in Toronto, and I love my city. I love my country, and anything I can do to help better our city and our country, I'm all for it. So being patriotic is great. You've been hearing a lot about people sticking to Canada with respect to travel, buying Canadian versus product coming in from other countries, helping local businesses at a time when costs are definitely rising. These are all fantastic things. However, when it comes to investing, being patriotic or trying to stay within our borders, not a good idea. Understand, Canada only represents about 2 to 3% of the world's wealth, whereas the United States represents 20, 25, maybe even closer to 30% of the world's wealth. You need to have investments outside of our country. There is no doubt about that. And so, with that in mind, I talk to people all the time, and they're telling me, should we, just buy Canadian bank stocks, collect a dividend when the times are volatile? Staying out of the volatile areas, which have been the United States and U.S. investments. And my answer is no. When there is volatility, there is opportunity. And we saw, and I've just showed you how well the markets have done recently in the US and how much money individual investors have made, those that had the iron stomach to buy into the US markets, even the Canadian markets, buying in general when times were tough back in March, April, those that bought rather than sold out of panic, you have been rewarded. Our first chart here shows US stock market versus the rest of the world. This is an interesting chart, and I think a great chart. So the US stock market is in the gold, the global equities. This is the MSCI all world, excluding US, of course. So this is everywhere else outside the US. And you can see how often the gold line goes up versus the purple line comes down. You can see really since 2010 how much outperformance, or how many times the US markets, US equity markets, US stock markets outperformed the rest of the world in the last 15 years. Quite a bit, quite a bit. And you can see just there, minus 3%. You can see that the US recently underperformed a lot of places around the world. With the tariff announcements, it was a big underperformance, but it has since snapped back. So that's a great chart to see. You can see in the 80s how well the world equities or global equities outperformed the US. And then we had, again, a period of outperformance in the 90s, mid 2000s, again, global equities outperformed. So a great chart just to show you how dominating, how important, of course, the US markets are to individual investors. Our next chart, another great chart showing us where are the dominant companies in the world today. Why do I tell you, the investor, you need to be investing in the US? You want to invest globally, but the US is most important. Take a look at the largest companies by market cap. And I think many shows ago, we had a similar chart up. Take a look at these names: NVIDIA, Microsoft, Apple, Amazon, Alphabet, and Meta. Your top 6 companies, all US and all tech, I might add as well. Then you get Saudi Aramco, very large company out of Saudi Arabia. Obviously, oil, a big reason for why they come in at 2.2 trillion in market cap. But then right after that, Broadcom, we had Broadcom. We showed a chart of Broadcom. Some people say Mag 7. I'm going to call it the grade 8 because I think you can add Broadcom there. $1 trillion company as well. TSMC, which is Taiwan Semiconductor, obviously out of Taiwan, although they have a lot of business in the US, building factories in the US. They come in as well, just over $1 trillion, 1.5 trillion. And then once again, the last 3 out of the 12 listed here: Berkshire Hathaway, Warren Buffett's company, Tesla, and Walmart. These are the biggest companies in the world. And if that isn't a reason that individual investors should be putting some money, and I would say quite a bit of their money in the US, I don't know what is. We hear from Canada Pension, we hear from mutual fund companies and their Canadian mutual funds investing as much as 40 to 48% abroad, much of that in the US. They have to keep at least 50 or 51% to be considered Canadian, but everything else seems to be going outside of Canada. And again, that has changed a lot over the years. Since I've started in the business over the last 26 years, that number has changed a lot. Next chart really shows the US dominance. Top 10 countries by nominal GDP as of 2025. United States at the top, 30 trillion in nominal GDP. Everybody talks about China catching the US. Well, they've come a long way, but they're still not even 20 trillion. So they're still over 10 trillion away. And then you have Germany, the third largest, Japan fourth, India fifth, United Kingdom now sixth. Canada sits 2.3, and we are a little bit away, And actually, it's interesting. Brazil, not many people know this. Brazil is one of the top countries in terms of growth as well. So you want to be patriotic. That's fantastic. I agree with it. I think we should try and support businesses in our country, local businesses. But when it comes to your hard-earned investments, the money that you want to put to work to help you grow your portfolio, the money you want for growth, in my opinion, I think you need to be looking outside of Canada quite often, as many of the pension funds and the mutual funds do. I think you want to look to the US, which is where, as you've just seen, many of the best quality and biggest names exist today anywhere in the world.